Welcome to Market Buzz. I'm Greg Schnell, a Canadian technician and host of the Market Buzz. Each show, we do a deep dive into different industries using weekly charts to see what is happening on a long timeline. Please follow me on Twitter at Schnell Investor, and you can also find my blogs on gregschnell.com as well as StockCharts.com. So this week, I'm going to cover off Consumer Discretionary, and there's a reason. Normally I like to look at Consumer Discretionary at the beginning of July as it gets ready for the back to school season, the Canadian Thanksgiving, US Thanksgiving, the Christmas holiday period, as well as the travel season for summer. There's a whole bunch of things going on in that sector. And so it can be a timely time to go dip our toes into that water over there. So we're going to dive into the Consumer Discretionary, and the way we're going to do that is I'm going to show you how to set up a scan to actually go in and get the sector and bring up all of the data around it, and then you can take your data and manipulate it any way you'd like. So first of all, when you just hit New Scan at StockCharts on the home page, maybe I'll just go to the home page and walk you through that. So here you're on your dashboard. And what happens here is you're going to go say New Scan. And when you do that, you get this line, type is equal to stocks. So we want a list of stocks, and could be ETFs, could be other things, but we want a stock and we want the volume to be a minimum. And in this case, it's 40,000. It doesn't really matter. We could set it at a higher level. The whole idea is to just kind of get this rolling. So here I've got, and group is cyclical sector and closes greater than 5. So what does that mean? So the group is the cyclicals. Consumer discretionary and cyclicals are interchanged a lot. And then basically I only want to look at stocks over $5. So we go to this technical scan, and we would literally just go down here and pick inside here, and you can see here's the cyclicals. And we could select an individual group like that, or we can just pick the whole sector, and then we would say add, and that's going to pop this line up here for us. And then we would just add closes greater than $5 or something like that. And you can set it up any way you want. I'm just trying to use an example for you. Anyway, I've already done this. You run the scan, and you get a scan result. And of that scan result, in this case, it comes out with 484. And so then what I did was I took that and I replaced an existing chart list with these results. And so on the drop-down menu, that's what this is. And for me, so maybe I'll just go there. So for me, I have a whole bunch of industry groups. I've shown this many times, but it's always good to refresh. So I have different types of charts all set up. And in this case, consumer cyclicals, the whole sector, we want to just go get it and put it in there. So some stocks have dropped off, new stocks have come in, so we want to have all of them together in one place. So I've put them in there. And then if you want to preserve the sort order, which I did, what I did was I click on preserve sort order. And by doing that, it's going to put a number in front of all of them to show us the results. So in here, when I go to this scan, let's just go to summary. So we're going to go to summary. And in the summary mode, Tuesday was a red day, so don't worry about the actual change in value for one day. We're kind of looking on bigger picture. So what I've done is I've sorted it by scooter ranking, and then I've sorted it by industry group. So it's going to take the top stock in apparel retailers and then scroll down, and it gets to the bottom here, and then it's going to switch over to auto parts. And there's 480 stocks here, so there's a lot to look at. But one of the things to be aware of just when we're scanning is where are all the top stocks. And in this case, I like to look for stocks with a scooter ranking better than 75. So when we get down to Kohl's Corp, we can see all of these roughly 25 stocks all have scooter rankings that good. When we scroll down to autos, we only have 6 that are up in that kind of range, and then all the rest of them are pretty weak, and that's auto parts. And then when we go to automobiles themselves, they were doing quite well, and now all of a sudden they're slipping. Only two of them are above 75, let's call it three, and the rest of them are drifting quite a bit lower. So one of the ideas of investing with themes or with industry groups is if the whole industry group is moving higher, that's supportive for you, in that if all the stocks are lifting in the group, like all the oils or all the automobiles, as they start to push up, then you're going to catch that ride. When they start to roll over, that's a clue that the group is losing its momentum. And even if you're in the strongest ones, you probably want to pay attention to the weakening of the group. So here you can see the automobiles are very weak, not really performing that well. When we go down into broadline retailer, here's Amazon just hitting the 75 level. It broke out to a new high. So that one looks particularly intriguing, but we can go see that, it's a very small group out of 15, and 5 or 6 of them are leading that group. So we could go look at those types of stocks. And then there's business training agencies. There's a few in here that are doing okay, but for the most part, the group isn't doing that much. Now, there's apparel retailers, and then there's clothing and accessories. And to me, I would have called them all the same. Wrong. There's a whole different industry group. So what you can see here, we would scroll down. So the way that I've sorted them, when I hit that save sort order, when I copied it into this directory or this chart list, it puts these numbers at the front. So if I just sorted by scooter ranking and not by, let me just scroll up here so I avoid the scrolling. So if I did this, it's going to mix them all together and not make any sense of it. But again, the other way to do it is to use the preferred sort order, and now it's going to put it by the strongest stock within the strongest industry group, and that's the order. So if I clicked on 1 month or whatever, now it'll show me, the color green over here would give me an idea of how big they are. This one's up 32%. So you can see some of the stocks on this page are actually a lot farther to the right, because it uses a relative scale here to draw the green bars. So when we see the different sectors, or the different industries within the sector, what you want to try and do, or what I want to try and do, is find the strongest stocks in a strong group. And that's the best way to go for me. So looking at this apparel retailers, you can see there's lots of 90s, and then we went down to that clothing and accessories. I can just scroll down here. So there's clothing and accessories, and what we see here, again, lots of good names. Stitch Fix, this is a name that's been recently in the news, and it's right around 75. And we can see that the stock on this chart ran up really big, pulled back, and is now looking like it wants to set up its next run. So it's a place to look for us in those top 25% stocks to see what's going on and see what's working out. And we'll also look at the autos and just see how the scooter ranking is telling us what's going on in that industry. So we can go look, nothing wrong with that, but we can also get the information just by quickly browsing these different types of areas of the market. So footwear, we saw Nike soar the other day on earnings, and so that stock's just starting to take off. But we've got Crocs that's been a real stalwart, I would say unbelievably so, but holding up, very, very well. And over the last month, up 10%. Remember, we changed these numbers to for 1 month. And then here's Skechers. You can just see that chart looks like it's ready to break out again. Lovesac Company, this one's been admired. A big move there from $20 to $90. Now it's pulled back to $70. The real question is the move over? Tempur-Pedic, this one just broke out to a new high recently. So I think there's a real opportunity here to just kind of focus on sorting things into an industry group, and then with that use the scooter ranking to kind of give you a clue of what stocks you might want to look at. And so we could either use this mini chart here, or we can actually go into the sectors. So let's pick Crocs and just start to work through from there. And what we see is a stock with a defined uptrend. Everything looks pretty solid. Always looks worse when the last day is down, but in general, the stock is still climbing. We don't have any real reason to doubt it. Looks like it gapped up almost 3 months ago, so that was probably an earnings gap. So we probably will see results from Crocs in about 2 weeks or something, towards the end of the earnings month. So if April and July, roughly the last half of April, last half of July, we should get the earnings. I think the bigger thing to be aware of here is how's the rest of the group doing. So in that case, we're just going to flip to the next chart. And we see Deckers recently broke out. We know Nike broke out in footwear, but they also have a big apparel thing. So here's Rocky Brands. This chart's basically gone sideways. It looks like it gapped up in here, probably an earnings gap, and then hasn't done anything since. 2 months before that, there was a nice gap. 3 months before that, there was a nice gap. So it has done pretty well on these gap ups. The real question is the whole sector starting to let go, or the whole industry group? So Skechers here basically gapped up in April and then hasn't done anything since. Nike gap up and then kept going. Really strong earnings announcement there. Here's Waco. Oh, sorry, I'm in footwear. Here's Waco, and we can see the same thing, right, where the stock ran up and then really hasn't kind of kept going. So that's one of the questions we have to ask ourselves: is the move over already, and we're too late? So we can talk about different things we want to do with a stock or with a group. But as an example, let's just say that we don't really want to buy something that's been on a run for a year already, kind of thinking been there, done that, and how much more room is there? There could be a little bit, like the oils have been running for a while. Could there still be more? That's a good question. Or do you want to start looking for things just turning up? So one way to do that, obviously, is to just go through and look at the charts. I don't find the daily charts help me enough with that kind of longer perspective. So if we click on a weekly chart, what we see is the PPO is just gently pulling back. Nothing wrong with that. The stock's still migrating higher. And is there anything really wrong here? No. Is it a good place to put money in? Well, it just broke out to fresh new highs here, and it's trying to hold that. So perhaps that could still work. Again, we've got the whole back to school thing going on, and the fall season. Lots of things could set this stock up to run higher. The other way to do that would be to look for PPO, some sort of momentum indicator, PPO or MACD or something, PMO, turning higher right around zero, and as it's starting to take off, kind of keep an eye on those names, and we could use a scan to do that as well. I'm not going to run that scan today, but the idea of sorting things into industry groups so you can see them is pretty important. And then the second component of that is, if you want to look at them in daily charts or weekly charts, it really depends on your trading time frame. So if if you're on a daily time frame and what you're looking to do is just pick a full stochastic turn to try and buy each one of these dips and ride it for 6 or 7 days and then sell, that's a whole different thing than somebody looking to buy this big breakout in October. And as the stock started to turn up, that was probably a clue. You saw the scooter ranking here, the black line, and it was terrible. And then all of a sudden it moved above 30, which is another scan I like to run. And then it went up and it became a top performer, and it stayed up around the 75 to 90% level, saying it's better than 75 to 90% of its peers based on market cap size. So it's still a very strong stock, nothing wrong with it. This scale here on the right is $18 to $36 is here, so that would have been a double, and another 50% on that. So it's been a pretty good move when you consider that in 9 months it's moved up 150%. So that's pretty significant. Sometimes the scale has hardly moved. So it could be in dollar increments, and it might be $5 or $10 for the whole year. And the real question is it moving fast enough to make money? So you always have to check the scale, and the scooter ranking can help you with that. It'll show you a stock that's gently trending up, let's say a bond ETF or something. So it was gently trending higher, but the real story on the right hand side is it's moving up by 10 cents at a time. So that's different ways we can use this. Now, Knoll and Herman Miller and all that just had merger discussions recently. So there was a big pop here. We can go look at Herman Miller. Where did Herman Miller go? A little farther. There it is. So just it moved down when Knoll moved up. So the question when you want to look at these, you still got to figure out that whole merger area. Is that something you want? And again, this stock is moving up. It made most of its move in pretty much one day, and then hasn't done much for 3 or 4 months, and then a really nice run in early April, but it's given almost all of that back. So we were at 44, it's now at 45 or $46, so it's up $2 from the actual announcement. Not really going anywhere quickly. And we can see the scooter ranking was just average. It was around the 50% level, and it's got up to 75%, so maybe somebody thinks it will be okay with the merger. Steelcase is another one of those types of companies, and it hasn't done a whole bunch since the announcement either in that industry group. Lazy Boy, the real stay-at-home furniture stock, was doing very, very well until all of a sudden the vaccine started to work and the stocks migrated sideways, and now looks more likely to make 6-month lows than 6-month highs, which really isn't the type of stock we want to own. Again, the scooter ranking at 17 tells us it's a pretty weak stock. So if you just think of the scooter ranking as the relative scale ranking of performance for the stocks. So when a scooter ranking is when two stocks move up and one moves up 2% and one moves up 1%, that stock is outperforming the other. And then what we try to keep track of with the scooter ranking is how fast things are moving up over a longer timeline, like 200 days, 150 days, 50 day, 20 day, that type of stuff. So we use 6 different increments there. And by using those different increments, we can add a score together for each stock and then rank the scores. And by doing that, we can quickly come up with the top stock and the bottom stock, and that's what the scooter rank marks. So 99.9 would be a stock that's outperforming everything else in its group, and then a stock at 10% or less is obviously one of the worst stocks in the group. So here we have a scooter ranking of 17, and you can see, really the stock hasn't done anything. We're all the way back at November levels. Not exactly a place we probably want to jump on this chart. We'd probably wait for more, more of an improvement. So if I went to look on a weekly chart, what are we seeing? And the PPO is heading down still. If it starts to turn up here, maybe even if the histogram starts to improve, it'll put it on our list for us to start watching. But one of the clues I like to use is how has the scooter ranking performed over a long period of time. And what you see here is a very average stock that kind of drops down to 10 and runs up to 70, but it never really spends much time. I have this line at 75%. It never really spends much time in the top quartile. So when I'm looking for a stock, and I'm looking at a stock that really hasn't ever been in the top quartile for any period of time, is that the type of stock I want to own? I actually want the ones that are either terrible and then really turn it on, like that chart we saw earlier. I think it was Shoe for Steve Madden. When that stock starts to run, then at least we've had a change in character. It was terrible and it becomes better. But when we look at Lazy Boy here, it's just never really great. So is that the kind of name I want to get involved in? Now, let's just go back and pick whatever. Here's Caesars Entertainment. And again, this stock's been really strong scooter ranking for almost a year. And interesting, its scooter ranking is just falling out of the top quartile now. So could it be that it's turning down permanently? And could be a definite clue. Or is it just taking a breather? And that's where the finesse in investment comes in. But what I like to see on this stock, you can see it was really positive for 2 years, took a break, stayed up here for another 6 months, down for 4 months, got back up and kept going. At least you know you're working with a stock that when it does turn on, it can actually run for a while. And and that to me is more important. Now, when I start to see something breaking down, that is a real clue that, check the stock. Do you want to own it? In this particular case, the relative strength trend line is starting to break here. So it was outperforming the S&P 500 and no longer is. So it's very close to 4-month lows here. So I probably would avoid something like this because the scooter ranking is starting to break down. Okay, so what are some of the other points in here? Okay, so here's home builders and whatever. Let's pick Lennar. So when we look at Lennar on the weekly chart, you can see it was pretty poor, and then it's been trying to pick up. And there's been a lot of discussion about how great the home builders have been. And don't get me wrong, they've been solid. But comparatively, the stock really hasn't done anything since November. It's been average, kind of in line with the S&P 500, and it's just starting to perk up now. Perhaps with the pullback in lumber, it can be another top stock soon. Looking at whatever LGI homes or something, this was a beautiful run here for 4 months. Now had a 3-wave down. Can it keep it going? And I think that's the real question is, are these home builders, has the majority of the move behind us? And if so, then we probably don't need to invest in it now. Again, I want to buy when the PPO is starting to turn up in these groups, not necessarily when it's turning down. So really depending on your investment style, I think we're all trying to find something going higher. But some people like to buy strength. So this one just started to go back up into the top area. Perhaps if it can get back above the 10-week moving average, it's time for the next rally in home builders, and it'll take you higher. I think it's more important to know what you want to buy and why. And maybe it's just I like to buy, let's say, breakouts to new 52-week highs. So on this chart, when we look here, we see right here it broke out to new highs. Well, what is the scooter ranking doing here? It's just starting to accelerate from being under 50% to above 50%. Not a bad place to look. So it's going from being a poor performer, and now we've had a character change and the stock is on its way again. So we could scan for stocks moving, scooter ranking moving above 50%. We could scan for scooter rankings moving above 30%. All of those are different ways to identify it. But what I've done, again, going back to the scan results, was set them up so we could go through, a whole industry. And if we took whatever, here's Restoration Hardware, the stock is, just one sec. The stock has been performing quite well, and recently here just started to stall. Now we also saw on Lazy Boy it was starting to stall. So it could be as the economy opens up, people aren't going to spend as much on their homes as they have for the last year. And these stocks need a breather, and stocks like Wayfair, as an example, might not perform as well either. But literally just going through all of these home stocks, we could start to see if they're still performing. So this one really hasn't done anything for 5 months. Looking at Grow Generation, sideways for 6 months, nothing really there. Kingfisher, don't even know what they do. The stock's been okay. It was on a really nice run in here, but really it's sideways for the last 2 or 3 months. Haverty Furniture. So there's, again, another one here where the scooter ranking was very strong. Now it's starting to dip below 75. And if it was starting to turn down again here, I'd probably let somebody else own it. Your PPO for the first time in the whole period here has gone below 0, suggesting probably a trend change, right? If it was being a top performer and now all of a sudden it's gone to lower momentum, it's a good idea to just let it go. Beacon Roofing Supplies, again, same thing, was a good stock running nicely, and then last 4 months hasn't done anything, so you probably don't hear anybody talking about it on TV anymore. And then since 2021 started, we were down here at the 95 level. It's been up to 115, it's been back to 95, and just in the last couple of weeks started to run up to 105. I would just say based on the rest of the group, it doesn't really look that positive to me. Even Home Depot here was outperforming way back in October and hasn't done anything since then. Scooter ranking just moved above 50, so maybe it's on its next leg higher in the backyard season where everybody's putting in barbecues and patios and that type of thing. So use the rest of the group to try and help you work through some of these stocks and just get an idea. Here's Lowe's. Again, scooter ranking is down in the mid area, so is there anything really there for us? Probably not. Okay, let's go back to look at the big picture. Here, even on, yeah, better look here. So on the scan results, we're just going to go to the summary page again, and we've got them listed based on the order of our sort. But as we scroll through here, and I'm just going to page down. So broadline retailers, we know that Amazon broke out to a new high. And what I like about this, see how the scooter ranking is at 75% just as it's starting to break out? To me, when I look at this stock and I see that sort of a move right at the end here, it was really out of favor for a long period of time, and now all of a sudden this mega cap is back with the scooter ranking up at 75. That looks pretty bullish to me. And when I click on the weekly chart here, I see the PPO coming down. It's now starting to turn up. So on some of those other stocks, they actually had their PPOs way up high and were starting to turn down. This stock's doing exactly the opposite, and that's the reason that I'm more likely to choose a stock moving above 75, just starting to take off, PPO starting to turn up from a relatively low level down near zero. And one of the traits you'll see on really strong stocks is that their PPO stays above zero through history, and the dips down around the zero level are typically buying opportunities, and you just kind of want to wait for them to set up and then all of a sudden start to turn higher. So whether it's scooter ranking moving above 50, it's moving back above most moving averages, PPO turns back above zero, PPO crosses your signal line, any of those things can help you scan for that type of strength. But when we look through the stocks in the area, we also want to see other names, right? This one, Broadline Retailers, is also home to Dillard's and stuff like that, Macy's. So here's Dillard's. The chart looks a little bit better. It's been climbing nicely. Is it over? Or are people just heading back to the department stores and now's the time to actually own these names? Now you can see the scooter ranking tucked right at the top here for a long period of time. That's quite a bit different than the Amazon chart. So the PPO is exactly opposite of Amazon, where it's up at an extreme. Which chart would I rather own right now? Well, I'd take Amazon because to me, it's got a lot more upside to go, and it just broke out today. Whereas Dillard's has been running strong, nicely, from $20 to $180 over the last year. One looks better to me than the other. So I don't always run to the strong stock. I look for strong stocks like with a PPO that, like Amazon, now all of a sudden turning up, and that would get me more interested than, say, Dillard's. So hopefully using some of these tools, scan tools, indicators, strength of the group around it, we can help figure out which stocks we want to own and use those tools to try and create an environment where you're picking winners that are getting ready for their next move higher, as opposed to getting ones that have run for, let's say, a year, and now all of a sudden you're starting to get in there and you take a look around and all of a sudden what do you see? Most of the stocks in the group are starting to make lower highs, like 2-month lows, 3-month lows, that kind of thing. Anyway, good luck with that. Hopefully I've helped save you some time there and figure out some ways to find good stocks. Thanks for taking the time to join me on Market Buzz. Market Buzz airs Wednesdays at 10:30 a.m. Eastern Time. You can also see the recordings on StockCharts TV YouTube page. Thanks, everybody. Bye-bye.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.